Welcome back to Trader Sage. We're going to review price action on the ES price chart utilizing ICT concepts. That's going to be the ES, the NQ, or the MNQ, or the MES. Just toggling through here. All right, so we're going to reset. We're going to do the MNQ. This is a weekly bullish order block, and this is the previous week's high. And we want to identify, so there's two ranges. You want to identify the dealing range, the range that price is currently in, and also the more dominant price range. But we get to that shortly, right? So boom, let's just clear the chart. I'm just going to try to restrict everything to as close as possible to this week. So we have this relevant right now. We have this. Give it a highlight that. See, it's been violated. That's more in play for this coming week. If price kind of pulls back into that and want to see if price holds above this inverted fair value gap for higher prices, taking out these relative equal highs here potentially. And this is only for entertainment purposes, right? So, haha, hee, right? Let's get it. Let me stop playing around. I cannot stop, right? So that's the previous week's high that you see price. Let's say that's a target. If you don't like that as a target, you want to say, hey, I'm into order blocks, and here you go. This is just the body. And you can see here that price is currently below the midway point of this bullish order block, the mean threshold, right? Usually color that a different color, but whatever. So there you go. I'm gonna delete that because I don't care about it right now. So we have the previous week's high. Boom, and we have this order block here, bullish order block. We highlight that. Bada bing, bada boom, right? Purple. What else we have that's relevant to this price action here? So let's just shoot this across and see. Shoot this across and see what it looks like. What it do? What it do? I'm just curious. I'm gonna make that purple. I'm gonna take that off. I'm just being curious. So weekly bomb. This is what we had before the week started last week. Stab down. So again, I think it does kind of like reference price holding above this this inverted fair value gap for this coming week. And let's see, right? So boom, we're gonna just finish talking about this week here. So that's a weekly bullish fair value gap here. Weekly bullish fair value gap, and we have, that's not relevant to right now. We can delete that. We have this order block, weekly order block highlighted here. I feel like another, ugh, these colors are like, ugh. All right, anyway, weekly bullish order block. And we have the previous week's high as a potential target. And wanted to see what this is pretty much the bottom of this order block, right? The opening price. I just wanted to see what impact did it have on price. Kind of held price down. Previously broke above it. You still see price like reacting to it, but and you can see 21.4, 64.75, and this low would be 21.471. So dug in there. Anyway, I'm gonna take that off because I didn't use it. It's order block. So we have that as a level. Okay, cool. All right. So what I want to do is take this box off because it's bothering me. Let me just put those screen lines back. Here, green. I'm gonna leave it on like 4 so we know that it's a weekly level. Then I'm gonna eyeball the. I don't have to eyeball it. Let me do this for y'all, man. Let me do this first. And then let's do quarters. And then let's shoot that out. Otherwise, wildin'. Guess it's reversed. I think it's reversed. Okay, straight now. All right, so there you go. Midway point, quarter. And there we go. So this is a weekly bullish fair value gap, and we just divided into quarters. You were there, you saw it, you witnessed it. Either way, this is like already said and done, but whatever. All right, so boom, that's what we have going into the weekly Peter Ray. So you one shot, one kill, right? You want to think about one shot, one kill. How can we capture the weekly range? Technically, you could have got out here, right? So this hell price, bullish order block weekly, and then you say that would be internal range, and this would be targeting external range liquidity here. Anyway, we leave those levels on the chart here, and we can think about the range that price is current. Well, thinking in terms of here when the market opened. In terms of here, this is where the market was when we entered the week. So this would be the range, this low to this high. This would be equilibrium. I'm gonna eyeball that one because make that like 3. So we take that off. Boom. So we got equilibrium of this dealing range. And if you wanted to deal with the dominant price range, it would be this low to this high. That's this low to this high. Retracement into this bullish order block. Really this balanced price range because this small gap here. And this is the end of the previous week. This is the 10 o'clock candle. I want to remind you guys, you're using Thinkorswim, that those 4-hour candles are different than TradingView's 4-hour candles. So take that into account and do with it as you will. So let's just highlight that. All right, so that's the 4-hour level, bullish balanced price range, and then price higher. Got a breaking structure here, retrace back down into this fair value gap. Okay. That's a different optimal trading tree there. Well, we do here. Here. We have the optimal trading tree long. 1 standard deviation is the target here. Almost reached 1.5. But even with that is And do this with the Judas swing. All right, boom. So that's this is your injury here, long pullback, and we have this inverted fair value gap right at equilibrium here. Right at equilibrium. So we have this break in structure, this pullback. Yeah, pull back into here. Why would I say price pull back into this order block, this fair value gap? Why would I use this as a fair value gap? It's because price reacted to it here. Price reacted to it here. So this fair value gap, price reacted to it here. 200 hours on May 28th. Essentially reacted to it here. You can use the order block. Reacted to it here on 1400 hour candle on May 28th. And then if you drag it out further, you'll see that all of these candles were digging into this fair value gap. So it was bullish fair value gap, violated here, turned to inverted fair value gap, pull back down into this fair value gap, and then decided to just violate that. And then once it violated it, it pulled back into it as support again, and then took off. Right? All right. So took off one. We have all of this. Technically, this is a balanced price range too. So we'll see. So again, this targeting previous day's high and previous week's high. Let's see what this looks like here. Didn't come down into it. Whatever. So, so we go down to a. All right. So this is of the trade entry for the week. Can help with the weekly bias. Boom. And also an entry here for this short, and then the pullback here, and then the continuation taking out previous week's high. Pull back down into this inverted fair value gap, send it right back up to retest this previous week's high. I don't want to be on them. I don't want to be on the 1 hour chart. Let's take some stuff off. Bam, bam, bam. All right, so we got the 15-minute chart. So we went to the 4 hour. We went from the weekly to the 4 hour to the 15-minute chart. This would be Monday. Monday created the low of the week, and Thursday created the high of the week. This is technically Monday still. Low of the week. Nope. Low of the week was on Friday last week, and the high was on Thursday. That's cool. That's cool. All right. So we have this. We have a few trades. We already have the prices holding above this 4 hour. First off, we are inside this bullish weekly fair value gap. We have a 4 hour fair value gap. Holding price higher. We have a break in structure. We have a retracement. Right? This is a inverted fair value gap here. I'm going to delete this because this is a lot of noise on here. Right? Pull this back here. Put a frame on that, like. All right, so inverted fair value gap. In optimal trade entry long on this time frame, 15 minutes, because we already have these weekly bullish fair value gap well, it's actually is a weekly bullish order block, weekly bullish order block. And then we have this inverted fair value gap. And we can just optimal trade entry long here. Need to get in here on the London open kill zone. Get in here at 10 o'clock. Right, so that's that would be adjusted here. Get in here, and that would be adjusted here. Okay, let's see. Okay, that's valid. Then here for this one, did you have a breaking structure here? Retracement here. Holding above, consequent across with this inverted fair value gap. Optimal trade entry long. Oh, that's for the day. One standard deviation, not quite. This would be your take profit here or here. Let's put the whole. Right, that'd be target one. This will be scaling. This will be target one. And it closed towards the top of the range. So you can kind of anticipate higher prices here, especially if you had your weekly bias here. But this is 1 day trade here. Optimal trade entry long, holding about this inverted fair value gap. All right, boom. Next day, price retraced again into this 4-hour bullish fair value gap that we highlighted. Actually, is a reclaimed bullish fair value gap. Here's a bullish, violated, inverted fair value gap, push price lower, and then you have reclaimed this bullish fair value gap and then trade it back down into it. All right, so boom, we on Tuesday, we did Monday, we at Tuesday. Remember, this is a weekly bullish fair value gap. And we have a 4-hour fair value gap here. And we have an optimal trade entry utilizing this low. This high. Optimal trade entry long. Or you want to use this low here because this was a stronger push higher. Then you will only get below 50%. But like for me, I don't use these long wicks, so I would have used the 3-bar pattern, and this went to the highest, the lowest swing, the lowest part of the swing low here. Still not quite optimal trade entry, but this is it here, 1-to-1. I was just testing out other options. All right, so that's for today. For today, target 2 hit. So we got, and so obviously I'm utilizing the previous, can't even call it all the time the previous day's range, but the previous range prior to where we at. So this swing low to this swing high retracement, right? Because this would be the low. So this is valid, right? So this would be that, push higher. We're going to move on to Wednesday. And Wednesday, we don't have any PD arrays around here except this previous day's high. All right, so in previous day's high, we kind of see that price is trading inside of a range the whole time. This is the Asia low, Asia high, Asia low. The price is trading in a consolidation here. And we have 2 news events, high impact news events. So seek and destroy profile here. And this is the range, essentially, this low to this high at first until price breaks it. So for this time block, for this day, because it's a tight range, then this 15-minute will become the higher time frame chart. And same protocol, discount to premium, discount to premium here. Right, so that's this range prior to price breaking out. And then we drop down to 15-minute. This is a 5-minute, right? All right, so still that tight range. Obviously, nothing changed, but we can see discount to premium better. So you see this inverted fair value gap here. Just blast it all the way through, right? Like, is if you want to, but that's here. You got 1, 2, 3 drives pattern, taking out liquidity. So then you got this boom drop down, took out the Asia low, ran back up, took out the highs, relative highs here, dropped back down, took out the low, and fell short here. That's this the ES, YM rated, NQ rated, the ES refused. So this is your divergence. This is why price returned back higher. What else do we have? So these are trades. This is an inverted fair value gap here, right into here. Actually a gap down, right? Inverted fair value gap, gap down, retraced into it, and then pull back. So let's delete this. And let's just draw that out so you can see. So we have that. Run on stops. This is technically your breaking structure running below this swing low. And so you have the open, then we have the high, pull back into this inverted fair value gap, and then low, and then the close. And it dropped again to take out these this low. So that's the turtle soup. Pull back up into this inverted fair value gap here. I'm not going to count the whole gap, but here to here, and you can see price respected it here, ran buy side, pulled back down, then took out the highs here during the AM session highs, PM session highs. Yeah, anything else, this would be, for me, you would have to go to a lower time frame. But if you use order blocks, then here you go. It's the opening price of this candle. 1, 2, yeah, a couple of opportunities here. And you have a breaker here. Right? It's a breaker. If you don't see the breaker, then I think you can call it like a mitigation block as well. That's this. So holding price lower. This is that previous week's high. Oh no, previous day's high. The previous day's high. And that's Wednesday. Wednesday, let's do Thursday. We can stay here if you like. So we still got this accumulation all the way through. Bum, bum, bum. This would be the range. 1, 2. Take it here. Taking out these lows. Fell short of dropping lower, but let me just see that. The range here. So that would be your optimal trend tree long here. 1, taking out these highs into the previous week's high. Then that's on a news candle, right? On the news, unemployment claims. Unemployment claims ran the lows and then took off here. taking out the intraday high, the London high, and then pull back again. We have an inverted fair value gap again here, and then price takes out this swing low and consolidates. And then we have this bullish fair value gap. Body seller story, the wicks do the damage. Didn't run the low here. This would be the low anyway for the optimal trade entry long as well. Kind of spooky though. So, but your stop is down here for a reason. And there's your one standard deviation. There's your optimal trade entry long here. Or you could use this fair value gap to get in. I'm actively avoiding trying to going down to a 1 minute chart. But anyway, we have this running buy side here. We have some displacement. We have a retracement into this fair value gap. So it's all about where is price coming from, where is it going, and how will it get there, right? So this is your fair value gap. What day are we on? This is Thursday. There's your short taking out the swing lows, swing lows, and retracing back down into that inverted 4-hour fair value gap. Market maker sell model. And now we have Friday. We're on Friday. You have a run on stops here. Right, so the lowest buy is second pay here because you have a balanced price range here. It dropped down here, institutional order flow entry drill because it's a balanced price range. Get in on the 1835 candle into this bullish fair value gap, or you can consider the balanced price range. Boom, retrace back into this fair value gap. Hold, because time. Then 8:30, 8:45. This keeps going. Target 1. Retracement. This range. This range. But this is all like a slow bleed, right? High resistance liquidity run here. And then we have news that pushes price higher into the previous week's high. It's a retest, so to speak. Still inside this dominant price range here. 1, 2. And when price opens up here, be inside of this range. 1, 2. And it breaks that range. Breaks that range in this inverted fair value gap now. And then it just right. So that's the inverted fair value gap. Nice and clean. Right, because this was the level. So so when price opened up right here, what's the range? It's here, there, that low. Then it breaks above this same high and this inverted fair value gap and holds above it. That's good. That's a reason, right? So you can say the London session consolidated again, and then 8:30 it expanded. Inverted fair value gap here. You have to consider the other side, like, right? So you want to pay attention to the right side of the chart, but also any key levels to the left side of the chart. Like these are relevant, right? Not really using the swing high, swing lows, but use this swing low, swing high, get money, support and resistance. And again, this goes back to this fair value gap being here and here. It's a balanced price range. This was a protected high over here because it rebalanced this fair value gap. So once it was broken, that becomes a key support and resistance level. And you don't have to use that. You just use this, pointed out before. You don't feel comfortable doing that, then your inverted fair value gap is here. Push higher. Again. Bearish fair value gap. Push price lower, taking out this low, and then push higher again. So you got 1, 2, 3 drives lower, taking out liquidity. This is the three drives reversal pattern. And I think that's it. That's all I got. This is the MNQ. That's like trades that I saw throughout the week and how I do things, right? Discount the premium, run on stops, displacement, and a pullback into an inefficiency caused by the price leg that caused a market structure shift. And that's it. Thank you for listening. Please like, comment, subscribe. Deuces. Eat what you kill, right?